Good evening. This is the Elliott wave update for the S&P 500 for Thursday, March the 31st, 2022. I'm starting here on the hourly chart because I want to get into what took place today and what implications that may have on the count, and what implications it may have on moving forward in the current structure. First, the market dipped way lower than what I expected it to. I had originally placed our 4 here. I left open the possibility that we would swing back down and test that low, maybe put in a slight new low below it, which we did, down at like 42.71. I'm thinking, oh, okay, I can live with that. You know, not that much of a difference. I could put the 4 there. Well, then the last hour rolled around and they just kind of sank it. And it actually broke below where I had labeled wave 1. So I've dropped the 1 down just to give it the room that if it needs. But this 4th wave is now getting too big. So again, it draws my attention to what could possibly be going on. Right now, I am leaving the count as it is and giving the benefit of the doubt to these markets that they're going to jump back in and run these things tomorrow for the expiration to get the prices they want on those component companies within these indices and be done with this intermediate wave 2. Now, I need to include, there's a possible 3 scenarios. The first one, just as I said, the wave 4 is coming in a little bit bigger than we thought. If I leave the wave 1 where it is, it's not breaking any rules. The wave 3 is the extended wave. And this 4 could work out because it could be A, the B, and now we're doing and finished, hopefully, the C wave. We are sitting just above the hourly 200. If it breaks the hourly 200, then I'm going to say no to the current count because I would anticipate additional acceleration to the downside. And now we're moving down to these next support levels. Now, the second scenario that it possibly could be is that the A wave actually completed up here. We just completed it. And I can do 1, 2, 3, 4, 5, and then put A up here. Not the completion of the entire cycle, just the A wave. Now, if I do that, what we are now moving into is a much larger B wave, right? Intermediate wave 2 should have an A, a B, and a C. If we're moving the A wave up, we're going to have to move the B wave down. I had been struggling with the fact that this was a very small B wave in comparison to the rally that we're witnessing. So it does make sense. But what it does is it allows the market to drop back to first support 4,441, then 4,382, 4,323, and the possibility of 4,280. We can come all the way back down to here. And then still turn and rally back above 4631 to put in the C wave and to complete the intermediate wave 2. Now, under this count, a lot would depend on the depth of the B wave. And I'll tell you why, because if you remember, I'm looking at this high at 48.08 as being the completion point for the intermediate 5th, the primary 5, and the cycle 5 that all sits above there. So if I'm looking at this as wave A, what could wave C look like? Well, I'm going to tell you. I'm going to leave those up. And if we can get ourselves all the way down to here, possibly down to this low. But let's go to the 618 because B waves can usually come within 50% to 62%, particularly on a wave that's this big. That's the wrong one. I want to go over here. I want to put up this drawing tool, and I'm going to put this in. Now we're just giving a straight estimate to kind of work what this possibility could result in if we get the moves that I'm talking about. There's no guarantee we're going to get anything, right? So let's just take a look. That's 31. And I'm going to bring it down, and I'm going to take it to the 618 level. If I put it there, wave C, when we're comparing it to wave A, can go, the first most common is that wave C is equal to 0.618 of the distance of wave A. That just brings us to 4694. Then we have 4738, then we have 4779. So we're still, even if we come down and we get to that 50% level, we're not going to be breaking back above. So pushing that A wave up there would then suggest that we're going to get a bigger decline here. And to tell you the truth, it all fits. We saw some intensity to the selling today, and that just really brings about a lot of things for me that, again, this 4 is too big, but a B wave is not. So even if we came down and we ran a little bit and we fall back down, we still, as far as a B wave goes, it's going to have its own ABC within it. And maybe this is just 1, 2, 3, 4, and a 5. Okay, that could be a wave A. That's the second scenario. So again, here we are stuck having to wait for the market to tell us. Now, I know that a lot of you guys that are trading and are looking to put on a position trade are getting a little frustrated with the fact that this is not ending, and gee, what's going to be my signal that that intermediate third is in force? Unfortunately, I can't say for certain if it is or if it isn't. The third scenario that could be playing out here is the fact that I dropped the 3 to here, put a 4 and put a 5 here, and that suggests that I put the C wave above it and then the intermediate 2 above that, and we are done. Now, for that to really come into fruition, we have to really start to break down. Now, again, I could do 1, 2, is this 3, 4, and then we get a 5. I'm on the hourly chart. I'd be looking for 5 down. We got a lot of things going on, and it's so typical of what our markets can do to mislead us, to throw us off course, to really put us into a tailspin about what their intent is. Because the two things that could come into play that would give a stronger signal to me, and that I continue to pass on to you guys, is that if indeed this intermediate wave 2 is done, and we're dropping now in the starting phase of an intermediate third wave, then yes, I'm looking for this to break and just start to go. And then that'll give me a lot more support that, and I'm talking about go, that this is it, and we're going to put it up there. Now, if it is, please don't get caught up on, I didn't catch the top, I didn't get in the right price. There will be so many trades to put on because this is going to go below 41.01 and keep on going. I'll be reviewing that in a larger update that I intend to put out on Sunday, and I've been alluding to it. And that one will be that I'm going to be updating the longer term picture. And the title of it's going to be, Are You Prepared? And basically, it's kind of putting together everything that I've been talking about, that the bond market is in a massive meltdown, that what's really happening in the Ukraine, don't get fooled that this thing's over. There's a lot of talk going in that respect of what's happening. The inflation that's continuing to rally out of control. And now we're getting to see it again, even on the consumer level. It just, as we go to buy things like printers and other items that we use in our offices and in our homes, are suddenly getting strong increases from the people that are selling it. Now, inflation is still really in control. It's got a lot to say. So the Fed is way behind. So that whole story, finally, if things kind of click in, and maybe, just maybe, these large firms that have been pushing this, and which I believe to unload additional positions through the expiration cycles, maybe they already had done with that. But that's the other factor to now add in. If they're done, they're leaving a lot out there. And again, we could see tomorrow's an expiration. And if they're thinking that you're going to get 1,100 in Tesla, yep, it's still possible. But you see what they got to do? They got to run this thing $30 real quick. And actually, they were looking at 1,150. So that's even more. And you're looking at Amazon getting itself back above 33 and then above 34. That's what they were targeting before. That's now gone. Facebook, they were targeting 225 to 230. We're now back below, et cetera, et cetera. Google dropping 57. Apple, they were starting to target the 180 strike. Well, now we're back down below 175. So in order for this all to come into play and them to be successful at those levels, well, you can see what they got to do. They got to come in and buy it and not stop. So what can we look for tomorrow? One would be exactly what I'm talking about here. That if we get a continued slide, then we have the two scenarios that this intermediate wave 5 is done, but the signals we're looking for is strength in the selling, bam, hitting bids, bam, falling through the moving averages. I'm going to slip and let's go back up to that daily chart and take a look at what we're talking about here. This is what we need to see. They need to break, and this is on the daily chart, break the daily 8, break the daily 20, the 50, and the 200. So this thing needs to clear all of that. If this were to drop 100 points from where it is, it'd be at 44.38. They'd be knocking on the door of this stuff. Look how flat that 200 is. That is support coming off. Breaking it, being that flat, it turns into resistance. So there's a lot of stuff coming together here. We just need to have a little bit of patience and to be able to trade it as we go through to what will definitively tell us of where direction is for the next month or 2 or 3 or longer. If this intermediate wave 2 is complete, I'm looking for it to come down and break this. Now I'll go up to that weekly and let's just take a peek at what it could and should be doing. That's breaking that low. Well, here's one that I'm looking at. I'm looking at this thing coming down below and heading for the weekly 200 at 36. This is a major, big intermediate third wave. I'm looking for this to really start to drop this market. Here's our support. Remember, on my big picture, if this is all complete, wave A of this new larger correction, I'm anticipating to come to 2174 or into that zone, into the area of the March 2020 lows. So hanging out up here is just like, this is a folly. We have enough economical problems going on that are just really being aggravated strongly by our government, by the Fed and their non-reaction, by the going on in a lot of the quantitative trading. There's a lot that's kind of keeping this thing way up here. Now, that's what I'm looking at, folks. So I'm going to tie this all in because I don't want to drag on the update too long. For tomorrow, each one of those 3 scenarios, which will be in, they're in the, not in the comment section, but it's all listed in the description of this update. Each one of them has validity. Each one of them could be playing out. What I think if we get continued downside is that we have the possibility that wave A is up here, we're in a stronger B wave, or this intermediate wave 2 is complete and it finished at 46.31. And we are going down big time. Also, if we, come on, hold on. There, that stopped it. Excuse me, phone calls, telemarketers. So in any case, what we got going on here is either it's done or it's wave A. If it's done, this is the beginning of a strong move, starting to knock out these moving averages on the hourly and to knock out this support on the hourly and begin to just drop. That'll be our sign. Second scenario, that this is the wave A, then we've still got a strong B wave and we should see it drop quickly. But we could get as low as here, 43.23, 42.80, and still be a B wave and still rally to new highs. But worth trading, folks. The mindset to get us together to trade, you can't be thinking I'm going to catch the big play. There are a lot of plays in between. And if you're an option trader and you're doing swing trades and options, they're available. You can put on a lot of spreads. You could buy a put. You can sell a call. There are all kinds of things that can be done where you're participating in the correction, regardless if it's going to drop all the way down to 36 or if it's only going to come down to 43. It's still playable. Now, the last scenario where it could be is this 4 is just actually going to be what it is. But we hold and we start to rally again. To do that, you better see that it's going to break the 4, the 8, the 20, and the 50 as it goes back up and gets itself above 46.31. Now, does it need to do that for tomorrow? No, not necessarily. But I'm tying this all in because of the expiration and the desire for the market to continue to move higher because it needs to get out of more positions. I could be totally wrong on that, but that's just my scenario for why we're getting this push. Now, I'm going to leave it here. We've got 3 scenarios. I described them. Look in the description section of this particular update, and you'll see them. I've written them all out. If you have any questions, please feel free to drop it in the comment section. I do answer. I will try to provide an answer. If you have a question about what I'm talking about, leave me a message. I will answer you. And the other way, please pay attention to what the price action is telling you. Don't get married to any trades. Play along with the market and don't try to go against the market. And let's all have a great trading day tomorrow. It could end up being nothing, but that I don't believe anymore. I think we're going to get something. It's either going to be a stronger upside move or they're just going to continue to battle it out and knock this thing lower. Those are our 2. How that all comes through will determine what this larger count is. Okay, I'm going to leave it there. And our next update will be on Sunday, April the 3rd. Let's not forget tomorrow's also April 1st. Boy, that could really be dangerous. But also on the 2nd, on Saturday, I intend to put out 2 additional updates, one for the S&P, one for the NASDAQ. Both will be covering the cash market and the current status, but on the bigger picture. We'll be looking at that bigger picture. All right. Have a great trading day tomorrow.